So I think some of the platforms will continue to basically play kind of hide and seek and basically to try to dodge regulation, 140 million. And then of that, we have recovered already 70 million, right? Current market situation is, as perhaps many of us know, is that there is too much money out there.
Und damit hallo und herzlich willkommen zu einem neuen Video von Northern Finance. Mein Name ist Alex Black und ich habe heute den CEO von Mintos hier im Interview, Martin Sulte. Hi, welcome to the interview, Martins.
Hi, Alex. Thanks for having me.
For sure, and thank you for being here. So let's get straight to the critical questions of the investors I collected before the interview. And the first one is about the loan volume on Mintos. Before the COVID crisis hit in January of 2020, you financed on Mintos in 1 month alone over 300 million euro. And today you're standing at about half of that, at 150 million euro. What is your take on this?
It's actually, well, it is one of the metrics which we follow and put out there. That is not the main metric which we use. So internally, the main metric which we use is active loan portfolio, and then actually it's assets under administration kind of in total is the metric which we use. So in that sense, the thing about the kind of how much is funded throughout the months is it's very much affected also by the type of loans which are available in the marketplace. So because if there's a lot of short-term loans, they get recycled quickly, and then that actually brings up the volumes like significantly. So that's also what has happened now, like compared to pre-COVID, is that we do have less of those short-term loans and less of the kind of big lending companies which are issuing short-term loans. What we do look at is the metric which is also available on the statistics page, which is basically outstanding loan portfolio, and that has been climbing since the start of 2021, and we are now, I think, at something like 480 million, which is still below pre-COVID, but actually we're getting close to pre-COVID levels already.
How much is missing?
I don't know, but I think pre-COVID we had something like 540 million, maybe a bit more, but it's basically approximately we are already kind of pre-COVID level. The best is just to go to statistics page, and we have all the information there.
And you have been licensed as an investment firm. So first of all, congratulations on that. I know it took a long time and a lot of resources from what I've heard. What will change for investors now? What are the benefits?
Sorry, I just looked up the number. So it was 595 million before the COVID. So now it's 480. So it's February still was 595 million. For us, thanks for the congratulations. That's definitely a huge milestone for us. So we've been working on having a regulatory certainty from day one. So and it took us quite a while. So we've been operating with basically some regulatory uncertainty ever since we launched. So now with getting the investment firm license, which is basically falls under the MiFID, so we do become basically market participant in financial markets as regulated by all the directives of the European Union, and also we do get the electronic money institution license. So that's a huge milestone, and we are very happy that brings us regulatory certainty. We still have to finish the transition plan, but very much looking forward to scaling the business and taking it to the next level.
And some of your competitors, like Peerberry, for example, they say they don't need this kind of licensing you have now, and there are no benefits for investors. What would you say to them?
Well, obviously, every platform has their own view on regulation. So I think some of the platforms will continue to basically play kind of hide and seek and basically to try to dodge regulation, which I think is very much short-sighted. So I think, well, we are dealing with financial services, and it's been actually a bit too long for us to get the license. So it perhaps should have been already all platforms licensed and regulated earlier than this. So I think it's actually, well, I would definitely not agree that it doesn't give anything to investors. So basically what we are getting is investment firm, which is basically under the MiFID. And MiFID is a cornerstone of European financial market regulation, which actually the only thing what they do is protect investors, work on transparency. And if somebody says that this is not protecting investors, then basically then the question is like, what is protecting investors? Because MiFID is basically regulating all the banks. It's basically regulating all the financial sector, from the bank, brokerages, insurance companies, like whatnot, right? So that's the bespoke regulation, which is also going to help in our business. So and basically we're going to follow what the MiFID and MiFID II puts out there, which is cornerstone of the European financial market regulation. So that is with all the intention to protect investors and protect retail investors. And there are very many clear benefits to investors, which I think investors going to realize once they start, actually, because now we're still in transition plan, so we haven't put like all the information out there. Still notes are not available, and all the kind of setup is maybe still a bit unclear, but overall that is a huge step for investor protection when it comes to kind of the rights and needs, and then when it comes also to transparency. So I would say that MiFID regulation is as good as it gets in European Union. So there's no better regulation today. So if somebody says that it's not true, then basically they're saying that the banks are also not regulated properly, which in my opinion doesn't make much sense.
Okay. And you just said that you're in this transition period, so to say, and new investors currently can't sign up, but they are put on a waiting list. So they can't invest, but have to wait until they can. How long do you think new investors have to wait on that list?
So we try our best for this period to be as short as possible, but obviously for us to transition all the operations what we have, so it's not a simple business anymore. So it's quite complex. We do have quite a lot of lending companies, a lot of prospectuses to file and to be approved. So it takes time. Maximum what the transition plan can go on is 6 months. Our intention is to do it faster than that. So hopefully we'll do it already this year. But max is kind of 6 months. So it's going to be a short period of time when we cannot onboard new clients. And then once we launch all the loan supply in the form of notes, then all the new clients will be from the waiting list first and foremost, but then thereafter also will be able to join Mintos and start investing.
And before we get to the notes, which are an interesting concept I'm also new to, I have to learn a lot about. How are the funds in recovery looking in general? What would you say? How successful has Mintos been so far with those?
Still, I think the best is the numbers, which can speak of our success, and then every investor can judge themselves if it's successful or not. So if I look at it, I would say we've been fairly successful. So we continue working. When we started, then the total amount at exposure was something like 130 million, 140 million. And then of that, we have recovered already 70 million, right? So it's been a good progress. We continue to work on the recovery, so we expect to basically recover more. Of course, there's going to be some bad debt at the end of the day, so we don't expect to recover all of it, and that's also what we put out there in the recovery updates. So that's part of basically investing, that there's going to be some loans which don't perform and some which go into the bad debt. So now with all the numbers, what we have so far, what we see is that those who were investing in 2020, say potentially might look at around like 8 to 10% potential capital loss. So which is basically a year's profit, because all those numbers we have to put into the context. Like 130 million, it's a huge number for sure. But then this 130 million does come from 600 million portfolio, which we had before. before the COVID, right? So, and now with half of it recovered. So basically we remain at something like 60, 70 million, which is approximately 10% of the portfolio which we had before all the recovery cases started to pop up and before the COVID basically struck out. So it's been fairly okay progress. So we're going to continue working on that. It's recoveries is never kind of super quick process, and we'll do our best to recover as much as possible and to basically reduce the bad debt, which would then hit some of the investors.
All right. And many investors ask me how the situation is looking at Finko and Cashwagon in particular. Can you comment on that?
I think on the ins and outs of each case, the best is actually to join we do run regular recovery sessions. Ask Mintos anything about the recovery. So there we speak at length about each situation. If you look at the Finko, so actually we have recovered already around half of the exposure. So there's still recoveries going on. With Cashwagon, it's a bit worse situation or much worse situation. So the recoveries are not as successful. But also, if we look at the same Cashwagon, I mean, that was in total, the portfolio was something like 6 million. So 6 million of 600 million, it's 1%. And that's perhaps not like that big of exposure if we compare to, say, Finko or some other players. But that doesn't mean that we don't work on that. So we do our best. And it is this kind of recovery process. They do take time. So they do take time. And we've seen some of them actually come to successful outcomes. And we will do our best to do the same, what we can in a reasonable manner with cases which are still outstanding.
Thank you. And another question that interested many investors is in Germany, earnings from Mintos so far have been considered as interest, earnings as interest. Does this change with the new notes? Will earnings now be taxed like stocks?
I'm not sure what you mean by exactly stocks, but in general, nothing going to change when it comes to kind of tax treatment. So it's still going to be a fixed income type of investment where you invest your capital and then you earn interest on that and you're taxed on the interest.
Okay, so they won't be considered dividends, for example?
Nope.
Okay, that's good to hear because interest earnings are always, well, treated preferentially when it comes to taxes in Germany, and yeah, German's quite a large user base of yours.
Of course.
Okay, and now to something that didn't work out, a product you had, Invest in Excess. Can you tell us why you stopped it?
We actually didn't stop it. We basically, I would say, developed it further. And what we did is on the basis of Invest in Excess, we developed the Mintos strategies, which was our first iteration of those strategies. And then now with all the regulatory process in place, we haven't had kind of a chance to improve them and continue working on them, and we will do it after we finish transition plan. So that is definitely on our immediate roadmap to basically further improve strategies, maybe bring some new strategies. So there are also other strategies which we could put out there and to make basically investing even more easy for investors. So it's in a way actually has been evolution of Invest in Excess, because the principles are kind of the same. Is somebody who invests through strategies. The main difference from investing directly is that they can cash out in normal market conditions. They can cash out in almost immediately, if not immediately, in most of the cases.
And you just said that it might wait until the transition period is over. Will investors also have to wait for other features or new products until this transition period is over? Or will there be new products coming out in the next 6 months also?
Some will, but to be honest, it's perhaps marginal. So well, it's been a lot of effort which have gone into the getting the necessary license, and it's a lot. Well, while for investors, not many things going to change. So on the back office and the back end, actually, a lot of things change for us. So we haven't basically devoted all resources toward that, and we want to finish basically transitioning. And then, if anything, like we are super eager to get back to improving the product, to get back to bringing out new features, and to also introduce and launch new products, which, for instance, the same ETFs we are working already now, but we want to finish transition plan and then kind of full speed and full scale focus on improving the product and user experience.
I think that's a good decision. And some investors have said in forums that they have to tell Mintos about the origin of their already invested funds. Will this be, or is this common, first of all? And second, will this be the case for every investor soon as well with the new regulation coming in?
So we did have a backlog to go through the investors for us to get regulated, and as we are now regulated players, so we do have to have all investors gone through the AML checks, and it could have been the case that those who had those questions, we didn't have AML basically checks done before. So for new investors, that would not be the case. So we basically would start from day one, and we do have now our own developed kind of AML system, which we have in place. And in general, that's more of a kind of a backlog thing, which we had to do. And this was a huge effort also on our side. So we had to go through each and every investor and check that they do comply with AML requirements, which again are something which is directed by the European Union. So it's not that we come up with those AML requirements; they are in the law, and we do have to follow if you want to run a regulated marketplace. And we do have to basically check investors and check where basically source of funds. We have to check source of funds, which is basically prerequisite of successful AML check.
Okay. And regarding diversification, many investors were interested why there is not a setting in the auto invest to adjust the percentage attributed to each loan originator instead of each loan company.
Oh, yeah, I would have to look it up. So what exactly you mean by that? So I would suggest, then, I mean, we do collect all the feedback. So if investors see that this is something which is missing, I definitely suggest to reach out and actually to let us know those suggestions. And that is how our product roadmap is built. So we do, I mean, as you might imagine, we have like millions of requests, most likely today. Okay, maybe millions is exaggeration, but like a lot of requests. So, and we basically have to prioritize them, and one way of prioritizing them is we look at what is the feedback from investors. So I cannot comment on this exact detail what you said. Don't know actually.
Okay. Then let's get to the next and final question actually. So the interest rates on Mintos have been dropping for a while now, and my personal portfolio also, it can't get much above 11% interest per year for euro loans under 12 months in duration. And I'm just interested in what's your take on this? Do you want to have more conservative investments on Mintos in the long term, or also these higher 12% plus opportunities?
Exactly. So that's a good point you bring. Is we cannot look at the interest rates in isolation. So we have to look always the interest rate versus the risk. And for some lending companies, the risk has decreased. For some, maybe it has stayed the same. So and then the average is not really kind of a good way to look at the things. So we should look into the respective loans, the respective kind of Mintos risk score, and see how the interest rates move for those, right? So for risk score 7, 8 or so, yes, you might see kind of lower interest rates. And then for risk score 4, 5 or so, you might see kind of a higher interest rate. Having said that, I mean, we live in the current market situation, and the current market situation is, as perhaps many of us know, is that there is too much money out there, and basically they are chasing all sorts of investment opportunities. So we do feel those those effects as well on interest rates. Basically, there is higher investor demand for the loans which are available, which then basically push down the interest rates, which is also, we have to look perhaps into the context of what is happening in general in investing world. So if you look at the same stock market, so actually just now I read that somebody is expecting that over the next 7 years, actually there's going to be negative return on stock market because it's so high up in value. So the bonds are actually basically zero. So all of the investment opportunities are basically, the yields are really getting pushed down because of all the kind of money supply coming in. So that's what we also see on the other side, on the loan supply side, where some of the lending companies, they see that they can actually fund loans somewhere else cheaper. So it doesn't make sense for them to then fund through Mintos. So that is also part of the reason why we see maybe a general kind of decrease in, albeit slight still, but a decrease in interest rates.
Okay, thank you very much for taking the time, Martins, to answer all of these questions.
Thanks, Alex. Thanks for having me again.
For sure. And maybe we can do this at your offices sometime soon when the situation allows it.
Very much so, yeah. Would be very much happy to welcome you and see you in our office as well, for sure.